All right, this is investment hack number 4, and if I'm being honest, this is my worst investment hack. This is the one that I have the worst history with. So if you've ever sat in the pew at church and the preacher says, on this one I'm preaching to myself too, this would be that one for me. Okay, so it's dollar cost averaging. It's a very simple concept. It's a basic concept. You've probably heard about it before, and that is just averaging in over time to your investments. You're allocating a certain amount of money and you consistently contribute every week, every pay period, every month, every quarter, every year, whatever it is. You pre-plan how much you're going to contribute and you just automatically do it. You do it whether the market's up, whether the market's down, and you just average in. You know, as humans, it's very easy for us to convince ourselves, you know, the market is going down right now. It's been going down lately. Maybe it'll keep falling. Maybe I need to just not invest right now. I won't necessarily sell my stocks, but I'm not going to continue to add to it. It can be tough to continue adding when things are going down. What you need to flip in your mindset is that you are committed into changing your future through investing. You are committed to adding more capital. As you earn more, you want to allocate more and more of that to your future. And that doesn't happen when we turn it off because something's not right in the market, something's not looking good in the economy. If we only invest when everyone else is excited about investing, we're missing the best times to get bargain basement prices on some of our stocks. Something else that can contribute to the mindset that maybe I don't need to continually just invest right now, because you might have a short list of stocks that you're investing in because you have a very focused portfolio and all of them seem to be not the right time to invest in. Maybe all the prices are running high, they seem a little bit overvalued, and you start to think, well, maybe it's not the best thing. If you find yourself in that situation, you may want to start looking for other stocks that are trading down. You may need to flesh out your list to include a few more, at least for a time, so that you can take advantage, because there are always companies. There are so many different companies to choose from in the market. If you're willing to look for it, if you're willing to do the research, you can always find something that's underpriced. A good solid company that is not trading at the value that it should be. So for myself, I have had periods of time where I auto drafted out of my paycheck a certain amount. It was auto allocated, and that was by far the best thing to do. But life creeps in and you have special one-time events, special trips, special expenses, you know, maybe things to do with your family. And you end up deciding that you're going to turn off the auto draft. You're going to just contribute when you have the extra money. Well, that turns out to be very, very difficult. And really, honestly, if you look at the history of my investing, there are periods of time where I did this really well, and there are times that I really struggled. And maybe sometimes it's lumpy, and you can contribute more at certain times than others. I would highly recommend to set a base level, a minimum level that is on autopilot. And that's going to help you. And you may say, well, I'm not even sure which stocks I'm going to buy when I contribute sometimes. That's okay. Put it in the account. Keep contributing to the account. I usually find that if I can just have the discipline to put it in the account, I will find a good place to park that money. I will find a stock that I'm excited about, that I think is on a good deal right now. I'll find a way to invest that money if I can just have the discipline to put it in the account. If you can master DCA, dollar cost averaging, you can be a fantastic investor without always picking the right stock, without trying to time things. You can be a great investor just because you're consistently putting the money in. It's a simple concept. It's just incredibly hard to do it. Until next time, have a great day.